This is a global stock-picking fund. I'm searching for industry champions, overlooked and under-the-radar opportunities for growth. These high-quality companies are gold standard, capturing significant growth themes, balanced with a more defensive, weatherproof part of the portfolio to provide a buffer during market dislocations. I've been managing this fund for over 20 years at Rathbones, and I'm proud it's the top-performing fund in the country in the global sector. We have a secret sauce to investing, qualities that we look for in a good investment and red flags. It's not so secret because I'm going to tell you what it is. Pure play, scalable, and repeatable strategies. Companies doing something different, shaking up their industries, growing share within a growing market. Entrepreneurial, adaptable, and prudent management teams. We avoid traumatized, turnaround, special situations, and recovery plays. I like unblemished growth. You're using us to work with the very best and brightest industry experts and analysts. We're building an investment case and then punching holes in it to build up a 360 view of the risks and reward. We then invest in 50 to 60 growth stocks in developed markets, the US, UK, and Western Europe, with a multi-year investment horizon, aware that we may change our mind and react to mistakes. We balance this with a weatherproof part of the portfolio, about 20% of the fund, that has even more defensive and resilient fundamentals to protect us from a volatile world with inconsistent returns. But the long term usually serves us well. The strong get stronger. And the stocks we've held for the long term, some over 15 years, have driven the greatest contribution to portfolio returns. This fund has significant exposure to the US, growth stocks, and our overseas currency exposure, the US dollar and euro, is unhedged. But I think the greatest risks come from what we don't do. We don't own stocks listed in emerging markets. I don't think I have the skills or the expertise to do it. We don't own unpredictable sectors or industries where the main driver of success is outside of their control. Value stocks, banks, commodity stocks, or just no-growth areas such as utilities. We don't have very large position sizes. Typically, our stocks are 1.5% or 2%, max 4%. We think this is sensible, but we can lag when these areas are racing ahead. That too is a risk. While we are aware of the ESG ratings, controversies, and sometimes engage with management where we feel material, sustainability and ESG criteria are not a cornerstone of the investment process. We do take our governance responsibilities seriously and vote on every AGM resolution, often followed up with engagement letters and management meetings. This isn't about campaigning. This is about protecting our ownership interests and being good stewards. You need at least a 5-year investment horizon. But if you have the appetite for equity markets and the volatility that comes with it, this can be a core holding in a wider portfolio. Over 20 years, the fund has delivered a 1,100% return. That's 13% average a year, with many years much lower and some years much higher. It might not be right for everyone, but for me, it's a core holding, my largest personal investment. It's also my daughter's largest personal investment, which really focuses the mind.